What is up guys, this is Yasin Nizami and you are watching Passionate Realtor, one of the fastest growing YouTube channel on Canadian real estate market with particular focus in Toronto GTA, as well as some of the macroeconomic factors that has an impact on the market. In this video, I'm going to cover the event that happened in 1971 that has changed the entire financial industry, that has changed the entire banking system. I'm talking about the Nixon shock. August 15, 1971, when President Richard Nixon of United States took US dollar off gold standard. Now, a lot of people do not understand what does it mean in layman's terms. So I'm going to break it down for you so that you guys can understand what happened after that to the currency that we trade in and how this is impacting our financial well-being so that you can make educated decision about your financial investment. So basically, up until 1970, the US dollar was backed by gold standards, which means the US government and Federal Reserve cannot print money if they don't have equivalent amount of gold reserve that will back it up. In the early 1960s, there was more amount of US dollar in circulation than it was supposed to be backed by US dollar. That has raised some concerns to the European nations, especially Germany and France, and they started to redeem the amount of gold in exchange of their currency. And as a result of that, there was a threat rising up to US dollar, and the American government, US government thinks that this will basically drive the US dollar value down, and then it is going to basically impact the dominance of US dollar in terms of the global currency of trade. In order to counter that, and of course, I'm not going to go deep into those reasons, but if you can search on Google, you can definitely find a lot of details. But what I'm trying to say here is, in order to protect the US dollar monopoly and the power in terms of the global trade, the US government actually took that decision to take US dollar off gold standard. And since then, the US dollar became a floating paper currency, which means it's not backed by any gold standard or any tangible asset. It is just basically a floating currency, and they can print as much as they can in order to meet their financial goals. Now, there are some repercussions that will going to stop them or slow down their money printing process. I'm going to cover that in a little while, but understand that the currency of other countries is backed by US dollar. Basically, it is set based upon the US dollar value, right? And US dollar is not backed by anything. It can be printed, anytime they want. And since then, they have been printing it. If you look at this chart, you can see from 1970 onwards how much US dollar has been printed by Federal Reserve, and that has driven the US dollar worth in terms of buying power to the bottom. Okay, so the US dollar has been losing its buying power just because the amount of currency in the circulation has been continuously increasing. Since that day, a lot of famous economists and financial advisors, they say since that day, the debt became the money and savers became the losers. And what does it mean? So if you keep saving cash, like today, I see a lot of people still save cash in order to purchase their first property or anything in their financial life. They're still saving cash, and saving cash is one of the worst thing to do, because as you can see, the cash is constantly getting devalued because the Fed and the government, they keep printing money. As long as they can continue printing money, the value, the buying power of that fiat currency is going to get decrease every single day. And this is the fundamental reason why we are seeing the prices of goods and services is constantly going up, right? Real estate is a best example. People think real estate is expensive, and it's getting expensive and getting out of people's reach. But the reality is, guys, it's not really getting expensive. It's the currency that we trade in, it's losing its buying power, right? The value of the currencies keep decreasing to this day. And that's why the goods and services that we purchase, it's getting expensive in relation to the currency that we purchase. Going back to my previous point when I said the debt became the money, and of course, I'm talking about the good debt. Of course, there's a difference between bad debt and good debt. What is bad debt? Bad debt is something when you purchase that has a depreciating cost, that has a sunk cost, right? Car loans, student loans, furniture loans, credit card loans, anything that you take loan in order to purchase a product that has a depreciating cost, that has a decreasing value, that's a bad debt. You should always avoid taking bad debt. But then there is a good debt. What is good debt? Good debt is something when you take loan to acquire an asset that is going to appreciate in value, an asset that is going to generate recurring income or revenue in the future, an asset that will help you to retire your taxes, retire your expenses, reduce your tax bill, an asset that is going to generate wealth. That is good debt. Real estate, people buy real estate by taking debt, is a good debt because if you purchase a property, let's say for 2%, 3% interest rate, but 5 years down the line, you will get 100% profit out of that property. Is it a good debt or bad debt? You can decide. So since that day, the debt became the money because the smart people, what they have done, they basically took debt and then acquired assets. That's how they became wealthy and rich. A lot of people who do not have financial understanding, financial literacy or education, they keep buying, depreciating assets like, expensive cars, expensive clothing, expensive furniture, putting everything in one property, which is their primary residence. No doubt, you have all the right to improve your primary residence, but do not put everything into primary residence because that's not going to give you anything in return unless you sell it and then invest into something else, because that's a liability, not an asset, right? So if you're putting everything into a liability, it's not going to give you any return in terms of rental income or anything like this. But what I'm trying to say here, guys, you should understand the way money works, the way banking system works in order to make your financial decision. If you keep saving cash, you are on the losing side because you are basically racing against the time, because the Fed and the banks and the government, they keep printing money to this day, and they will continue doing that because there is no other way. The financial system that we live in is driven by injecting liquidity. As soon as we see the GDP is going down and the economy is shrinking, what happens? The government and the Fed comes in and they pump money into the system to kickstart the economy again. So they're basically kicking the can down the road, and this is the bubble that is being created. People think that real estate is a bubble. People think stock market is the bubble or cryptocurrency is a bubble. But the biggest bubble of our lifetimes is US dollar, or this fiat currency, because if you look at it, this US dollar is being printed again and again, and then this bubble is keep growing. I don't know what's the end, but at some point it has to stop. What will happen after that, I don't know, but this is the current system that we live in, and we have to play accordingly, right? If you're seeing that this fiat currency is being printed, being devalued constantly, then you have to make sure that as soon as you get earnings in that fiat currency, you park it into something else that is going to hold its wealth. People think gold is a bad investment, but in my opinion, gold is one of the good ways to park your money, while you're not spending it, because gold has been historically keeping its value. Whether you like it or not, people can argue it's not a good investment, but that is a very good investment vehicle, right, for you. Cash is not. Cash is constantly getting devalued, but the assets like gold and silver and platinum and real estate, they are holding its value. Okay, so that's all I wanted to say in this video. Make sure you get your financial education and your literacy in terms of understanding how money works, understanding how banking system works, understand how the economy moves in a country. That will help you to make a better financial decision for your financial well-being and your investment. If you like it, give me a thumbs up and give me your comments and questions down below. I will be more than happy to understand your perspective and answer your questions if you may have. Until my next video, take care.